This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, stocks in the developing world across the board were on the back foot today as the U.S. approved its stimulus bill, and that fanned inflation fears in the market. The emerging market equity index sank about 1.5% on the day to a two-month low. It was pulled sharply lower by a 3.5% fall in China mainland stocks. Now, we saw South Africa's JSE taking its lead from weaker global markets today, but it continues to be supported as resource stocks and gold miners strengthened on the back of rand weakness against the dollar. Now, that certainly helped to further lift bullion producers today. We saw the gold mining index up almost 4% on the day, while resources climbed just under 8%. Now, also coming up on today's show, Total reveals plans to mitigate environmental impact from its oil operations in Uganda and Tanzania. The Massmart Group is closing more stores across South Africa as sales decline. And some of the women blazing the trail as the world marks International Women's Day. Well, our starting point tonight is oil matters. A French energy giant Total has revealed measures it will undertake to mitigate the environmental and human impact from its Tilenga project in Uganda. Now, the plan also covers a $3.5 billion pipeline carrying oil from Uganda to Tanzania. In partnership with the China National Offshore Oil Corporation, Total plans to exploit oil reserves in Uganda's Lake Albert. Now, amongst the measures it plans to take, Total will voluntarily limit the Tilenga project's footprint within Uganda's Murchison Falls Park, and development will be limited to less than 1% of the surface area of the park, although the permit allows up to 10%. Well, let's get some reaction from the ground. Michael Baleka now joins us in Kampala. Michael, always good to see you on the show. Now, of course, environmental groups in Uganda are arguing that this pipeline will threaten local communities, both in Uganda and Tanzania, also water supplies and, of course, biodiversity. So do these steps we're hearing from Total address all their concerns, and how are they reacting to these new steps?
Hello, Uche. Uganda's oil and gas were discovered in an environmentally sensitive area. We're talking the largest Murchison Falls game park. Some oil wells besides rivers and lakes. The biggest lake, Lake Albert, which lies across the border with Uganda and the DR Congo, you know, and this river, of course, the Nile, the longest river in Africa, flows through this Lake Albert. Building a pipeline means there's going to be a web of pipelines crisscrossing in the park, and in some parts they are going to be above the water. Much of the 1,400-kilometer pipeline, which this project goes through land, some of this land is privately owned. But today Total, in a statement, said that they are taking all necessary steps in compliance with the social and environmental best practices. For example, all the pipelines in the park will be buried underground, and that only about 1% will be on top. And Total also says that the pipeline route has been traced and the design works have been finalized, as well as the environmental and social impact assessments for both Uganda and Tanzania. And of course, these land acquisition processes are going on, and some people will be resettled. And the new land will be, of course, they'll either be given money or they'll opt for a house. Those are some of the things Total is talking about, Uche.
Well, Michael, the project is said to be pretty significant for Uganda's oil and gas sector and, of course, its economy. Apparently, it's going to unlock billions of dollars in investment going forward. Now, give us an idea of how important this pipeline is to developing the oil and gas sector in the country, and tell us why we've heard it has faced so many delays till now.
Uche, the East African crude oil pipeline is a $3.5 billion project. But on the onset, this project is expected to unlock, we understand, between 15 to 20 million, I think 20 billion US dollars into the Ugandan economy. This project is planned to create more than 10,000 jobs. Just the pipeline project, 10,000 jobs are waiting for the construction to start. And this is from, of course, Hoima, Western Uganda, to the Tanga port in Tanzania. But the delays have set back many planned investments, including the construction of a refinery. The delays also mean the project affected persons. These are persons who are staying along the pipeline route. It means the money will not be coming in time. And Uganda has been borrowing, as you may know, Uganda has been borrowing a lot of money on the premise that these proceeds will be coming from oil and gas. It will be paying back from oil and gas. And the World Bank has warned this could hurt the economy. Much of the delays have, of course, been caused by the prolonged negotiations between government and the oil companies. For example, the issues of tax. Uganda has not had oil in a while, so has not had oil. So there are tax issues and tax laws to put in place. Issues regarding recoverable costs, because the oil companies have spent quite a considerable amount of money and they need to be paid back. But the government says, Uche, this is a blessing in disguise in a way, as they try to align, of course, their interests of the oil companies' interest and the interests of the Ugandan person. Uche?
Well, Michael, it has been about 14 years since Uganda announced the discovery of oil volumes in the country. Give us an update on the progress made in the oil and gas sector besides this project.
Well, a quick recap is that Uganda discovered oil in 2006, and the country has at least 6.5 billion barrels. These are commercially viable, of course, commercially viable oil is 6.5 billion barrels, but the experts say about 1.5 billion barrels, depending on the extractable oil, depending on the technology, will be extractable. The government says the project is technically ready. What is remaining right now is the commercial agreements to start and execute the project. And that's the final investment decision, which we understand is expected by the end of this month. Just to also let you know that this project has been extended almost about 7 times since 2010. So we are hoping this time will be the last time. And also, Uche, the 6.5 billion barrels of oil just come from 10% of the entire exploration area. So Uganda currently right now is conducting licensing rounds for the exploration of an additional 5,000 square kilometers. But the plan is to have the first oil, this oil that they're working on right now, to put in place maybe by about 2027. But all these things means infrastructure needs to be put in place. That pipeline needs to be built, a refinery needs to be built, and people need to be compensated, and skills need to be put in place to work on these issues.
Sounds like a long way to go, but many thanks, Michael, for that update. That is Michael Baleke joining us there in Kampala, Uganda. Well, let's move on now to South Africa, where the Massmart Group is again closing down stores across the country. The group has a number of brands, including Macro and Game, which are the biggest and most popular. But sales have been declining, especially in Mass Cash division, which mostly houses grocery stores that cater for the lower income market. Here's Sumitra Naidu with more.
Massmart, majority owned by US retailer Walmart, is still busy with a massive restructuring. Last year, it closed 34 Dion-wide stores that retail technology and appliances. It's now preparing to close 14 stores under its Mass Cash division.
It's been quite abundantly clear that the business hasn't been doing well, doing very, very, very well. A lot of it points to the issues around COVID and the ability not to trade. Because remember, we had a period where we only could buy essential products and services. So they claim that they were quite negatively affected on that side.
Jumbo Cash and Carry, Save Right, Cambridge and Rhino Cash and Carry are the main brands that fall under Mass Cash. 14 stores will be closed as part of a plan to return Massmart to profitability.
So when a company, specifically a retailer, decides to close a store, they're usually looking to close stores that are not profitable. So the ones that they're targeting are, like I said, in the lower LSM. That's the ones that they're targeting, and it's going to reduce their store footprint around the country, and it's quite significant from their perspective.
Massmart sales suffered a $400 million loss as a result of COVID, but analysts believe the company is overextended. It has hundreds of wholesale stores with large stock inventories. Financial results due next week is expected to show a net loss of $116 million.
There's a lot to do with their business fundamentals, which are quite significantly negatively impacted. They need to look at finding their space specifically within the SA consumer and look to actually grow their business and bottom line. Closing the stores will help them save money, but it does not change the growth trajectory of the business. That still is, I think, should be top of mind for management, and specifically should be top of mind for everyone. I think we forget that we're in a declining economy with declining levels of disposable income, which makes it very, very hard for retailers to compete for our attention and our shrinking wallet.
Analysts agree that COVID had a devastating impact on the entire retail industry, but they also believe that Massmart needs to deal with its underlying operational issues that were there before the virus arrived in South Africa. Sumitra Naidu, CGTN, Johannesburg, South Africa.
And on that note, let's get you some other corporate headlines today. Financial services group Old Mutual says it expects a substantial drop in its full-year profits. Now, this comes after setting aside about $257 million worth of provisions to cover COVID-19 related claims. The company adds that headline earnings per share is expected to drop by between 40% and 60% in the year ending in December. Meanwhile, casino and gaming group Sun International says it expects a headline loss of an estimated $49.5 million. That's amid a huge profit swing after the COVID-19 pandemic shuttered operations and prompted it to tap shareholders. Now, the group has written down assets in South Africa by $84.2 million as a result of tough trading conditions. The swing in headline earnings per share also comes after the group almost doubled the number of its shares in issue in 2020. Meanwhile, American Airlines Group says it plans to issue $5 billion in bonds and seeks about $2.5 billion term loans to pay back a federal loan as well as other debt. Now, the debt is set to be backed by its frequent flyer program Advantage. Under the deal, the company will issue a private offering of notes worth about $5 billion, half due in 2026 and half in 2029, as well as a $2.5 billion term loan credit facility. And finally, the U.S. administration has urged computer network operators to review if their systems were targeted amid a hack of Microsoft Corporation's Outlook email program. It adds that the recent software patch may have left serious vulnerabilities. According to Reuters, more than 20,000 U.S. organizations were compromised by the hack. And that's a look at our corporate headlines. Well, let's head into a short break now, still coming up on the show. The coronavirus pandemic pushes up demand for alternative medicine in South Africa. And the African Union hails as remarkable the results achieved from the continent's partnership with China.
Every story starts out like this.
Okay, we'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sumitra Naidu.
Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Now, an unprecedented demand for vitamins, supplements and immune boosters used to treat COVID-19 has given the alternate healthcare market a welcome boost. Sales in the $500 million market soared by 20% over the last year. South Africa's infection rate has slowed after the second wave, but a third surge is expected in the coming weeks. Well, the infection numbers are over 1.5 million, with deaths approaching 51,000. With South Africa's vaccine program slow to kick off, demand for alternate medicine is likely to be sustained well into 2021. Here's CGTN's Julie Shire reporting.
South Africans were on the path to more healthy lifestyles before the COVID-19 pandemic. Over half of the population were on at least one vitamin, but the rapid spread of the virus forced most to take their health more seriously.
With COVID affecting a lot of people who are overweight with comorbidities, the diabetes, blood pressure, heart disease, I think more people are more concerned about their weight and then are trying to lose weight.
The Medicare group of pharmacies has a network of 50 stores across South Africa. It saw an unprecedented demand for vitamin C, vitamin D and zinc as infections rose and fell through the last 12 months.
Last year, March, there was this huge panic buy as we went into our lockdown. So that kind of skewed the numbers a little bit. But throughout the year, there's been a consistent increase, definitely 20, 25, 30% increase in the sale of vitamins and supplements and immune boosters in particular.
The slow arrival of vaccines means South Africans still have little protection against the coronavirus. The demand for vitamins and supplements is expected to remain high well into next year. Keeping up with demand was challenging at the start, but pharmacies are now well stocked up.
The demands have been very difficult to forecast. As we went into the second wave, which was in November and December, again, not as big a panic buy, but certainly a big buy in December and January, which again was a little bit unprecedented. And I do anticipate as we go into our winter and colder months that we will have a third wave.
Dietitians, however, caution against the excessive intake of vitamins, which should be balanced with good eating habits and an active lifestyle.
What people do need to worry about is if they just take one specific vitamin or mineral, because then they could get mega doses and then something else could happen. Rather take a good multivitamin and mineral that would cover everything. But then also start choosing your foods a little bit better. Also changing lifestyle in terms of doing a bit more exercise is also going to help.
South Africans will have to remain resilient as the battle against COVID-19 drags on. With mass vaccinations still months away, scientists predict the country is not likely to achieve herd immunity by the end of this year. Julie Shara, CGTN, Johannesburg, South Africa.
Now, the African Union says the partnership with China that is based on a win-win approach has registered remarkable results over the past years. In an interview with CGTN's Girum Chala, the AU Commissioner for Trade and Industry, Albert Mushanga, said the development cooperation China and other partners have provided have certainly helped the continent develop the necessary infrastructure and capabilities to grow Africa.
Partnerships are essential. Because the history of the world is that aid on its own does not generate lasting growth. A time must come when an economy has to rely on its internal resources to generate growth. And a lot of our partners see it in that way, that at the end of the day, it will be self-sustaining growth that is going to make a difference on the lives of the ordinary Africans. And we greatly welcome the partnership that has evolved with these various countries, China among them. You can mention of the UK, you can mention of the European Union, you can mention of the United States of America, and you can mention of Germany as a bilateral partner, although she is also a member of the European Union. They've given varied forms of development cooperation to Africa. And like I indicated, that has been geared towards ensuring that we develop the necessary infrastructure to develop Africa. We develop the necessary capabilities to develop Africa. And also, we generate increased flows of capital, because some of the foreign investors will not move unless there's inflow of public funds, so that they de-risk the investments. So all those have passed, have moved on.
What would be those important areas that the African Union wants China to participate aggressively so that the continental agenda can be achieved easily?
China is a member of the G20, and Africa has made a pitch, like other developing countries, that we need to restructure the debts of African economies and other developing countries so that they are able to recover from the COVID-19 pandemic. So it's that type of cooperation that we value. And certainly moving forward, we hope China can move with us in the direction of a partnership that promotes self-sustaining growth across Africa.
Well, an important meeting will take place very soon, the Chinese Communist Party meeting, which is very important for not only for China as a country, but also for its partners like Africa and the global community as well. But what would be, Commissioner, your message for this party meeting and for the lawmakers themselves to consider, so that the partnership between China and Africa can also be a story of success in the coming years?
Well, what we expect from our partnerships, including partnership with China, are win-win outcomes. A lot of Chinese companies see opportunities in Africa, and they're given the opportunities to invest and trade. And as we develop the Africa that we want, we would like to have similar access to Chinese companies, similar access to Africans who wish to increase their investments across China, as the case is happening. Because you can go to any part of Africa these days. In every country, the 55 African countries, you're going to find the Chinese community who have invested there. So that partnership of mutual exchange is very, very vital. And as the lawmakers sit in China make policies, I think the message should be a partnership of win-win outcomes.
Now, in July 2020, Egypt became the first Middle East and North African nation to launch the Closing the Gender Gap Accelerator. Now, this marked an important step in the ongoing efforts by Cairo and the World Economic Forum to empower women economically. Well, Yasser Hakim takes a look at what has been achieved so far through that initiative.
Several steps have been taken by the Egyptian government to empower women economically since the launch of the Gender Gap Accelerator last July. It includes more women taking leadership positions in private and public sector banks and companies, as well as supporting women-led SMEs.
This project is addressing to a large extent a major problem regarding the participation of Egyptian women in economic activities. Women in the cities and the educated women, they are doing quite well regarding their participation in labor market, but still these are minimal compared to the majority of women that are in rural areas, in the slums.
Although females make up half of the country's population, official statistics show they only account for 21% of the workforce.
Egyptian women are confronting severe problems regarding their participation in the labor market, the traditions, and sometimes they prefer to be married, and sometimes, their husbands refused for them to go to the labor market. Other social problems confronting families, Egyptian families, specifically in the slum areas and the rural areas. Illiteracy rate for women is high. The type of education they are taking in technical schools quite, weak and modest, and cannot enable women to, go to the labor market and to find opportunities that can, help them to survive and to have a good quality of life.
The government says it's addressing these issues. The Ministry of International Cooperation has set aside 13% of its funding for women's economic empowerment programs and another $3.3 billion from the World Bank to close the gender gap in the education and health sectors. Yasser Hakim for CGTN, Cairo.
You're watching Global Business Africa. We're going to take a short break now, but still coming up on the show. China embarks on a new development philosophy to build a modern socialist country, and how the new Biden administration in the U.S. is addressing China's growing status in the world.
It's just taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
No one again began holding guns. Machine guns from police forces toward the protesters.
Were you worried about your life at that particular time? Not at all.
What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
I just hope everyone can remember that the situation is not permanent and that everything will get better eventually.
And in other headlines this hour, the International Criminal Court has ruled that victims of convicted Congolese militia leader Bosco Ntaganda should get a total of $30 million in compensation. Now, Ntaganda was sentenced to 30 years in prison in 2019 for murder, rape, and other crimes committed in 2002 and 2003. And in Senegal, supporters of jailed opposition leader Ousmane Sonko have staged demonstrations outside the country's law courts. Now, this follows the arrest of the politician on allegations of rape. His supporters maintain that the arrest is part of a plot by incumbent President Macky Sall to scuttle Sonko's political career. And Libya's city of Sirte is hosting a parliamentary session where lawmakers will decide if they will endorse an interim government. Ahead of the vote expected on Tuesday, the UN envoy for Libya, Jan Kubis, has been touring the most influential nations in the Libyan crisis. Now, Cairo was his final stop on Sunday, and that's after visits to Ankara and Moscow. Meanwhile, South Sudan's government is urging the United Kingdom not to cut aid to the country. A leaked report indicates that the UK government is planning to cut foreign aid by more than 50% to countries such as South Sudan, and that's due to the COVID-19 pandemic. And that's a recap of other headlines today. Well, let's get you some international news now. China is embarking on a new journey in 2021 as it looks to build what it calls a modern socialist country by 2049. Now, it also marks the launch of the 14th five-year plan, China's socio-economic blueprint for the next half of a decade. Here's CGTN's Wang Mingji with this story on the country's new development path.
The concept of innovative, coordinated, green, open, and shared development. This is the Chinese government's answer to a series of theoretical and practical questions about its path. To achieve these objectives, the Vice Chairman of the National Development and Reform Commission is calling on efforts to focus on three policy areas.
We will enhance the quality, efficiency, and sustainability of our proactive fiscal policy, keep our prudent monetary policy flexible and targeted at a reasonable and appropriate level, and continue to improve the employment-first policy to enhance its performance.
In a draft plan, China lays out its new development philosophy as a main task of policy going forward. Take innovative development as an example. The plan says China will continue to grant tax deductions of 75% to some enterprises involved in research and development. On green development, the country will strengthen efforts to prevent and control air pollution. One of the goals in this area is heating powered by clean energy, accounting for 70% of all heating in northern China. Reform will also focus on areas such as transportation and telecommunications in 2021. The new development philosophy will be put into practice through 10 key tasks.
We will focus our work on the areas of COVID-19 control, science and technological capabilities, digitized development, supply-side structural reform, a higher level and open economy, rural revitalization, a new urbanization strategy, green development, public well-being, and national security.
The plan says China remains in an important period of systematic opportunity for development, although there have been changes in both opportunities and challenges. Experts say a more accurate understanding of this philosophy is needed in order to promote high-quality development. Wang CGTN, Beijing.
Now, reform and opening up have long been guiding principles of China's economic development. But what's behind and beneath those macroeconomic and wide-ranging policies? Well, CGTN's Omar Khan takes a look at one logistics hub that's aiming to become a global port, connecting China to the world.
It's perhaps a common sight along the coastlines of China, shipping containers set to dock and unload goods from around the globe. Here at the Yangpu port, a logistics hub that could be considered small in scale, the motive of generating greater traffic comes from Hainan province's free trade port plan and the nation's 14th five-year plan. Yet for Chen Shiwen, an experienced port manager, the Yangpu port remains a new project with tangible benefits to come in the future.
Yangpu is a new experimental zone for Hainan and the freight trade port. And the freight trade port continues to develop. More enterprises will set up shops here, and port conditions will improve. So for logistics enterprises, the opportunities are growing. Yangpu port is part of China's reform plan, so policy-wise, it will have greater advantages compared to other hubs.
Under Hainan's free trade port plan, logistic flows will be eased. The plan includes a trial policy of tax rebates for departing goods at the port, and even export rebates for domestically built ships that are registered for international transport. This policy more or less lines up with China's often long-term and meticulous economic planning.
By 2035, the Hainan Free Trade Port is set to be in full operation, with many of its seaports having liberalized their custom controls and import duties. And through China's continued efforts in opening up and reform, it's places like this, the Yangpu port, that will play a vital role in future trade both regionally and around the world.
And that future role of trade significance resonates with investment analysts, seeing China's opening up and reform as not only inward-oriented, but also focusing on attracting foreign investment.
Foreign investment has been about $3 billion US dollars, doubling the figure of $1.5 billion US dollars in 2019. One of the highlights of the Hainan Free Trade Port is a very low corporate income tax and individual income tax rates. Specifically for the period to 2025, there will be a reduced 15% CIT rate to be applied to enterprises registered in the Hainan Free Trade Port, which are engaged in the encouraged industries.
Situated in a strategic location, the Yangpu port operates more than 300 days a year, with over 40 berths capable of handling a shipping capacity of 10,000 tons. Port authorities see it as a logistics hub ready for the future.
China has put forward a new development pattern with a domestic market as the main body and then international circulation, such as the Belt and Road Initiative. For Hainan, we're adjacent to Southeast Asia and have the rest of China to the north. We intersect these markets. The Yangpu port accounts for 60% of the province's foreign trade. We also have the most open free trade port policy here. So from these respects, Hainan will be a window of China's reform and opening up.
With its tourism sector, trade routes, and commercial development, the province of Hainan is shoring up to be China's leader in economic reform. Omar Khan, CGTN, Hainan Province.
Now, China and the U.S. are the world's top two economies, accounting for over 40% of the world's GDP, 1/5 of the world's exports of goods and services, and half of the world's top 500 enterprises. Well, how is the new Biden administration addressing China's growing status in the world? Well, CGTN's Nathan King reports from Washington.
When then President-elect Joe Biden unveiled his new foreign policy team last November, it could not have been more different than his predecessors. Experienced, diverse, and committed to consign the America First policies of the past 4 years to the trash heap of history. But when it comes to relations with China, will it be that different? And can the two biggest global powers restore more cordial relations? One advantage for both nations: President Biden knows President Xi, and Xi knows Biden. According to Biden, they've had as many as 25 hours of private meetings over the years, and the first phone call between the two presidents was long and detailed.
I was on the phone for 2 straight hours with Xi Jinping. But, you know, we don't get moving, they're going to eat our lunch.
Eating our lunch in the US basically means winning big, leaving the competition way behind. And that concern is why Biden foreign policy might look very similar, but perhaps more organised than Trump's. In the first few weeks of the Biden presidency, his team has focused on securing supply chains away from China for the industries of tomorrow, giving no indication that the new administration will lift Trump's tariffs on $350 billion worth of Chinese imports either. The new administration has also continued criticising China over Xinjiang, Hong Kong and Taiwan. Although the rhetoric is less heated, the policy is pretty much unchanged, at least for now. Chinese Foreign Minister Wang Yi urged the new Biden administration to change course.
We urge the U.S. to stop smearing the CPC and China's political system, stop conniving at or even supporting the erroneous words and actions of separatist forces for Taiwan independence, and stop undermining China's sovereignty and security on internal affairs concerning Hong Kong, Xinjiang and Tibet.
But behind the differences, there are areas of global and regional concern where the US and China are willing to work more closely together over the next 4 years. The US rejoining of the Paris Climate Agreement signals a potential path to renewed cooperation. The US willingness to rejoin the Iran nuclear deal is another. The DPRK too, and finding a solution to the Myanmar crisis perhaps, and even perhaps a joint effort to combat COVID-19 or future pandemics. Beijing and Washington could also cooperate on reform of world bodies, from the International Monetary Fund to the World Trade Organization and the United Nations.
China is, as always, open to dialogue. We stand ready to have candid communication with the U.S. side and engage in dialogues aimed at solving problems.
Our relationship is very complex. There will be areas where we will significantly disagree, in particular as it relates to human rights. But there are some areas where there will be times when we hope to work with the Chinese in a cooperative way.
However, here in the US, the domestic political climate may limit that cooperation. 4 years of America First policies and a year of finger-pointing during COVID-19 has changed Americans' perceptions of China. What once were seen as policies that benefit both countries are now seen in a very, very different light. And China's economic and political rise is also leading to nervousness here in the US. Changing attitudes may be a precursor to changing any policies. Nathan King, CGTN at the White House.
Meanwhile, China is building a high-tech automobile valley in Wuhan, the capital city of central China's Hubei province. Once the epicenter of COVID-19 in China, the scheme firmly positions Wuhan as a new force for economic growth. Here's CGTN reporter Zhu Jiaxin explaining.
Though China's hardest hit city by COVID-19 in the early months of last year, Wuhan was able to roll back afterwards. It's since been among the country's top 10 economic performing cities. Now it eyes something even bigger. One step is to expand its technological advances.
High-tech sectors contributed more than a quarter to Wuhan's economic growth in 2020. And Hubei provincial government just rolled out key national laboratories for optics, space and biotechnology. And these are set to boost its pillar industries, which are many high-tech economies.
We are preparing talents and reserve technology for targeted industries. Besides, our great research findings can always become the driver for industrial growth.
The lab is located in Wuhan's high-tech zone known as the Optics Valley of China. Over the decades, talents and innovative businesses have gathered at the country's hubs for optoelectronic information and biotech industries. 2 world-class industrial clusters worth trillions of yuan are under construction. That's inspired Wuhan's largest industrial player to set its sights on building a new high-tech valley.
We have to rethink the life cycle of R&D, manufacturing, consumption, and service from the perspective of the whole industry chain when focusing on new development. Given the local government's plan to create an auto valley in China, we will step up efforts to master core technologies to make this our edge in market competency.
Aside from alternative energy vehicles, the automaker have recently begun testing driverless taxis, and they plan to provide commercial vehicles in the coming years.
Electronic information and alternative energy enterprises related with vehicle networking have already clustered in the Alto Valley. Now it seeks more talents from home and abroad and further improvements in key parts of the industrial chain.
To keep up the growth momentum in the years to come, experts say Wuhan's authorities will focus on mushrooming emerging industries and the so-called industries of the future. And Wuhan's values are incubating all of this new and exciting potential. Zhou Jiaxing, CGTN, Wuhan.
And shifting focus now, here's a quick look at commodity markets today. Oil prices climbing above $70 a barrel. And that, of course, is the first time since the start of the coronavirus crisis. That is after the U.S. Senate passed a $1.9 trillion economic stimulus package. And of course, a Yemeni group also attacked Saudi Arabia's oil industry. Now, prices have climbed for 4 consecutive sessions now, especially since we saw OPEC, Russia and their oil-producing allies agreeing last week on broadly sticking with output cuts. Meanwhile, gold prices bouncing back today from 9-month lows. The U.S. stimulus bill suddenly helped to boost its appeal as a hedge against inflation. Well, we're going to take a short break now, still coming up on the show. We take a look at some women carving new paths as the world marks International Women's Day.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Kanater, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
Now, as the world celebrates International Women's Day, the most pertinent question has been how to navigate a path to recovery from the COVID-19 pandemic. Now, women in South Africa have been left worse off than men. They've had to bear the brunt of job losses and lower earnings during the country's marathon lockdown, while still being responsible for putting food on the table in many households. Here's CGTN's Julie Shire with more.
Women have always suffered disproportionately to men in both the home and the workplace. The COVID-19 pandemic has deepened these inequalities further.
Women were always under pressure before the pandemic. They always did a double shift. They went to work, they came back home, they looked after their houses, their families, and did house chores. So that was sort of like the juggling work that the women did. But the pandemic has certainly made it worse.
The uncertainty of work, the uncertainty of children going to school, where your next meal was going to come from, became too much. It was really stressful for women.
The pandemic also highlighted the urgency of gender-based violence. A report by the Foundation for Human Rights found that shocking high GBV rates increased by 54% during the pandemic.
Gender-based violence is not really a second pandemic in South Africa. It is a first pandemic, and COVID could, be said that it's the second one. The other thing about gender-based violence, it is not going to just disappear by women, protesting alone, or by men just having discussions amongst themselves. It needs to be something that all of us collectively as a society work towards.
Lockdowns have also changed the way women work and interact with their families and society. Many have also lost jobs, and there's been a call to rethink policies to reintegrate women into the economy.
I think the opportunities now for us to think out of the box about, small businesses. How many businesses have been started with people from home, starting to sell things and manufacturing things, reinventing things, because it's the small businesses. If we can have those across our countries and support them financially, I think we will go a long way to build our economy.
Why are we not using all the available resources that our country has and ensure that we promote women into leadership positions where they can actually ensure that we have economic success and we have communities that are sustainable, resilient, and there's general well-being.
The COVID-19 pandemic has hampered efforts to achieve gender equality in South Africa and many other parts of the world. It's still too early to tell how deep the impact could be, but it may take years to recover what's been lost. Julie Shire, CGTN, Cape Town, South Africa.
Now, this year's International Women's Day theme is Choose to Challenge, and South Africa's first black female helicopter pilot, Refilwe Ledwaba, is calling women to do just that. Now, Refilwe says the fear of discrimination could prevent younger pilots from achieving their dreams. Instead, she advises young people not to focus on those who seek to bring them down, but join forces with positive and supportive peers.
Refilwe Ledwaba is South Africa's first black female helicopter pilot, and she does not let anything, even gravity, hold her down. She accomplished this feat despite growing up in apartheid South Africa with 6 siblings raised by a single mother. In 2005, she got the chance to learn to fly helicopters at a government school. Months later, she became the first black helicopter pilot to join the South African Police Service. But one of Ledwaba's lifelong goals is to pay it forward as many times as possible.
I'm one of the first black female in the country, and for me that's not important. And for me, what was important is who is the second, who's the third, who's the fourth, who's the 100th person. Then we start talking.
Personally, on my side, she has been a leading ambassador, especially for women within the aviation industry. And her tapping into the drone industry, I think, is a very big plus, where it's her tapping into her previous experience and those channels, then diverting them back into the drone industry.
Now a certified flight instructor, she has been running her foundation Girls Fly program in Africa for over a decade, training hundreds of young women in aerospace and aviation. It now operates in 4 African countries, and Ledwaba has her eye on others.
When I was starting off, because I started with GFPA when I was still in my last year at varsity, and just having someone to look up to that's so fearless and so determined to change the narrative of women in this space has been so inspirational to me.
Now in her early 40s and a few thousand hours of flying under her belt, Ledwaba says it was the support of people all through her life that encouraged her to break the boundaries of race and gender, to do something beyond just being a pilot.
I was really privileged to grow up with really powerful women. So all through my childhood, I saw women doctors. My mother was a school principal. So it was something that when I grew up, it was sort of normal for me to see women doing all these exciting things.
Thank you. Ledwaba is just one in a long-growing line of women who continue to push past the obstacles that have for decades barred women from soaring beyond the glass ceiling. Beryl Oro, CGTN.
Now in Tanzania, the Tourist Board has unveiled a plan that will expose women across the nation to opportunities available in the tourism sector. The idea is to enhance the participation of around 600 women in tourism and recreational activities in the hope of staving off the effects of the COVID-19 pandemic. CGTN's Isaac Lucando has more.
This group of women entrepreneurs has come to see one of Tanzania's 22 national parks. However, it's not just about fun for them. The government is asking the women to step up to the challenge of boosting Tanzania's tourist numbers.
We want to show women that they have the ability to own companies, run tourism-related businesses, and take up leadership positions in the tourism sector. We also see the need of cherishing women because we know they are pillars in their families. Through women, we believe they can influence their families to engage in tourism.
Government data shows the COVID-19 pandemic caused a decline in tourism earnings from a high of $2.6 billion in 2019 to around $1.06 billion in 2020. The government believes despite the presence of a large number of women in the tourism sector, low wages may be hampering a turnaround.
Tanzania is among countries in the world with more than 85% of women employed in the tourism sector. However, reports show that there is a wage gap in the tourism industry. Women earn 14.7% less than men.
About 1.6 million people are employed directly or indirectly in the tourism sector in Tanzania. Before the COVID-19 pandemic, the country received an average of 1.5 million tourists annually, contributing about 17.5% to the country's GDP. According to the World Tourism Organization, women in many parts of the world make up the majority of the tourism workforce. They tend to be concentrated in the lowest paid jobs in tourism and perform a large amount of unpaid work in family tourism businesses. The government's call for women to own businesses in tourism seems to be hitting home for some.
It's not just a means of earning an income, but it's also a means of advertising our country's tourist attractions. So it's a good idea as women entrepreneurs in Tanzania for us to turn to tourism to promote the country, but also benefit from what God saw fit to grant us.
Tanzania is targeting to attract 5 million tourists annually by 2025. It hopes to earn $6 billion annually, up from the $2.6 billion figure recorded before the coronavirus pandemic. They are hoping women will be the vehicle that gets them there. Isaac Lucando, CGTN, Dar es Salaam.
Well, before we leave you today, here's a quick look at Africa's currencies. South Africa's rand fell slightly in early trade today as the dollar hovered near 3-month highs. Like most emerging market currencies, the rand is coming under some pressure from a stronger dollar, and that's following the passage of the pandemic relief bill in the U.S. Meanwhile, Kenya's shilling continuing to hold steady. Markets are a little more positive about the prospects of economic recovery from the coronavirus crisis, and that's after the nation received its first consignment of COVID-19 vaccines last week. That did help to raise hopes that the economy could start benefiting from greater control over the COVID-19 pandemic. And that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.